We have Rahul Chadha, founder and CIO at Shikhara Investment Management, joining us on the show. Hi Rahul, morning, and thanks so much for your time this morning. And that's exactly what we want to understand, because the kind of cuts we've seen coming in from US, in fact, Nasdaq was lower by more than 2% on Friday. So quite the knock coming in. There is uncertainty about the authenticity of the jobs reports and lots of comments on that front. Give us a sense of how you're seeing Wall Street shaping up and what exactly is spooking that market right now.
Yeah, so we've seen a sharp rally in the market in last 2 months, and some pullback was natural. August, September, if you see historically, are not so great months for markets. And also now that all these tariffs negotiations are nearly done, market are waiting for some clarity. What does it mean for pressure on kind of an US consumer and the consumer earnings? What does it mean for business investment? I think those are things going to be reassessed. Obviously, the payroll number kind of spooked markets. But look, when you sit back and reflect, last 3 months were the most uncertain times. And typically, the first thing you'll do there is not to hire employees. And also what is happening is you have the AI-led productivity gains coming through. So with both these things working on minds of business owners, managers, etc., it was but natural that payroll would be bit soft. So I think something which we are closely watching is business investment, which is picking up. The new big bill, the infrastructure bill, etc., which the Trump administration passed, reduces the tax outgo by close to 8% by front-ending a lot of these exemptions, etc. So that should be positive for rekindling the investment back in the US.
Right, Rahul. Hi, good morning. Lots happening here in India as well. We're pretty much close to oversold. We've turned negative for the month of July. It's almost actually a 900-point fall that the Nifty has seen from the recent highs. And, we've been declining for 5 consecutive weeks. Of course, there is still that question mark on what tariff gets slapped on us from the US. But do you sense that the case is building up for a recovery, or you don't think quite yet? Because there hasn't been any major upgrade as well here domestically.
Couple of things weighing on minds of investors. First and foremost is the domestic slowdown. Does the slowdown get over by Diwali, the third quarter or fourth quarter? Our hope is we should see signs of urban recovery come through, rural recovery coming. This is where some of the rate cuts which happened in the first half of the year would kind of play through the economy. Though there is also a question which comes on household balance sheets, the unsecured lending which had happened over the last 2.5, 3 years, how much hole would that cause in savings and the household balance sheets, etc. So that's to be seen. But still, our base case remains for a third or a fourth quarter urban recovery. Rural recovery is slowly kind of happening through. And I think once that comes in the numbers, we should see market perform. At the same time, the regional markets were a lot cheaper. There was a lot kind of happening in those markets from value up, corporate governance improvement, etc. reforms. And we've seen historically, whether it was 2016, 2019, when a global recovery kind of happens, the North Asian markets typically outperform India, and India catches up in the subsequent year.
All right. Hi, Rahul. Morning. This is Shrishti also joining in. But what's been your reading so far, Rahul, with respect to the earnings as well? And any sectors where you're building hopes on? Because on the back of the earnings visibility, if you wish to highlight any pockets, because for now, seems like it's only the defensives, maybe the domestic consumption plays that are doing well in this sort of a market.
There are a couple of things which kind of impacted the earnings. One was the India-Pakistan skirmish. Second is something which we said, the consumer is still in the process of rebuilding his balance sheet, repairing his kind of household balance sheets, etc. So we continue to like large cap banks here. I think the pressure on NIMs was expected. It's there in the price. And now as the economy recovers, these banks should benefit from recovering credit growth, recovering NI growth. So that's one space. One is like selectively one may evaluate some capital market plays, but I think that would be for financials. Outside that, if you look at infrastructure, I think cement, we've had good set of numbers that should build up as housing demand kind of picks up. We've continued to like real estate from a 3-5 years perspective. I think that sector is a buy on decline. And outside that, discretionary consumption is something one would look to add exposure. The quick commerce names, the travel tourism names, they would be interesting here.
Okay, Rahul, thanks for your time this morning and thanks for highlighting a lot of things for us this morning, all the global action as well as the moves that we're seeing back home.